There are three central banks that hold so much influence they can make or break your forex trading strategy. Why? Because just one decision or even a single sentence from these institutions can send shockwaves through the entire forex market. Picture this: a single statement from the head of one of these banks can cause currency pairs like Euro USD or USD Yen to spike or drop by dozens of pips, just like that. In today's video, we'll uncover which central banks carry the most weight, why they're so crucial, and how expert traders use their moves to pinpoint the perfect entry points. If you're serious about making smarter forex trades, you can't afford to miss this. So let's get started. Let's start with the Federal Reserve, the US central bank, and one of the most powerful and intimidating players in the forex game. Every move, every word from the Fed has a massive impact on the US dollar, often hitting it with the force of a sledgehammer. But why is this such a big deal? Well, the dollar is involved in over 80% of all forex trades, so any fluctuation in the USD can send ripples through the entire market, affecting nearly every single currency pair. For example, if the Fed hikes interest rates, the dollar soars, gold plummets, Euro USD dives, and USD Yen skyrockets. These moves create huge opportunities, but they also bring serious risks for traders. That's why professional traders are glued to the FOMC meetings, Fed chair speeches, and hang on every word in the Fed's statements. A single line can flip the market upside down. Next, the European Central Bank, or ECB, which is the powerhouse behind the euro's value. The euro is the second most traded currency in the world, so when the ECB speaks, every euro-based pair, Euro USD, Euro Great British Pound, and Euro Yen, pay attention. For example, if the ECB raises rates, the euro often strengthens as investors rush to capitalize. But if there's talk of recession or loose monetary policy, the euro can drop like a stone. Unlike the Fed, which focuses on just one country, the ECB must juggle the economic policies of 27 different Eurozone nations, making its decisions even trickier and more impactful. That's why seasoned traders are glued to every word that ECB President Christine Lagarde says in her press conference. She's not just a spokesperson, she's a market mover. Now, let's talk about the Bank of Japan, or BOJ, the driving force behind the Japanese yen, which often acts as the market's safe haven during times of crisis. The BOJ has a unique approach. It has kept interest rates negative for years. But what does that mean? Essentially, holding money in Japan costs you instead of earning interest, in an effort to keep exports cheap and stimulate economic growth. But here's where it gets very interesting. The BOJ is known for its sudden interventions. Out of nowhere, the USD Yen can either plummet or surge because the BOJ decided to step in and tweak the yen's value, flexing its muscles to stabilize the market. Traders watching yen pairs are always on high alert for any BOJ action because a single unexpected move can send shockwaves through the market, creating massive volatility. So now you understand why pro traders keep a close eye on these three central banks. The Federal Reserve, the ECB, and the BOJ steer the market's direction for weeks and months with their decisions. Looking for opportunities in forex? Spend a few days laser focused on the news from these banks, and you will see the impact on your trades. So here's a question for you. If you had to choose just one of these banks to follow, which would it be and why? Drop your thoughts in the comments below and share your perspective. Your insight could be the game changer for another trader.